This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, February 19th, 2015. Euro dollar. So not much going on with the euro over the past several sessions, with the market content on consolidating within a very tight range between 1265 and 1534. So we're going to need to see a break above or below one of these levels for clearer directional insight. If the market continues to extend its current correction off 11-year lows at 1098 and breaks above 1534, this will open the door for a move up towards the 50-day moving average, which currently comes in around 117.50. But inability to take out 1534 followed by a break back below 1265 will suggest that bearish resumption is underway, with confirmation on a break below 1098, which would expose the psychological barrier at 110 further down. Ultimately, the downtrend in the euro remains firmly intact, and only a close back above the 50-day moving average would compromise the immediate bearish outlook. Sterling dollar. So cable continues to extend its correction since breaking out from key resistance at 52.70, and the market is now closing in on the next key resistance zone in the 54.85 to 155.90 area. 54.85 represents some previous support going back to the 23rd of December, while 55.90 is the measured move objective off of that recent consolidation that we had seen between 152.70 and 149.50. So once the market broke above 52.70, it opened an equal move that would project gains up towards the 55.90 area. But ultimately here, the downtrend remains firmly intact, and a lower top, a medium-term lower top, is sought somewhere in this area ahead of the next major downside extension back below the 49.51 2015 low. Dollar yen. So dollar yen continues its consolidation between the 7-year high from December at 121.85 and the December base at 115.55. This is a market that remains locked within a more well-defined uptrend, and as such, fresh upside is projected beyond 121.85 and towards 125 further up. But at the moment, nothing is going on, and the market has to break back above the recent high that we saw at 120.46, 120.47 to encourage the prospects of a bullish resumption. Any setbacks should continue to be very well supported ahead of 117, while ultimately only back below 115.55 would compromise the immediate constructive outlook. Euro Swiss. So Euro Swiss continues to extend its recovery out from those critical lows that we saw several weeks back, with the market now breaking back above recent resistance at 106.50 and trading up into the 107s. A fresh measured move upside extension is now seen towards psychological barriers at 110, while any setbacks should continue to be very well supported ahead of the 105.50 area. Ultimately, though, only back below 104.15 would negate the current recovery. Aussie dollar. So Aussie dollar is confined to a consolidation, a bearish consolidation, with the market locked within a more well-defined downtrend, and the market eventually is seen trading back below 76.25, the recent multi-year low, and towards the 73.75 area further down. However, if we do see a break above 78.76, which is recent consolidation highs, this could open the door for a more significant correction up towards the 81.21, 81.25 area. Dollar CAD. So dollar CAD is locked within a consolidation after recently posting fresh multi-year highs at 128. Additional upside is still seen in the Canadian dollar towards the next measured move and the 2009 peak at 30.65, but we could see a bit more of a correction or consolidation before the market ultimately puts in that next medium-term higher low and starts to head back towards that 130.65 peak. Any setbacks, however, should be very well supported into the 120 area, with only a weekly close below this level to compromise the current bullish outlook. Kiwi dollar. So Kiwi continues to extend its correction out from recent 71.76 lows, with the market now trading up towards key resistance in the form of the 76.09 level. 76.09 is important because it represents the previous base going back to the December of 2014, and this previous base should now act as a formidable resistance point, with the market locked within a downtrend and looking for the next lower top. SPX 500. So the S&P 500 has recently broken this week to a fresh record high, trading just over 2,100, but has since shown signs of exhaustion and the possibility for once again rolling over. Pay attention to the low from the 17th of February this week at 2083, with a break below to confirm the exhaustive bias and open the door for the onset of a correction back down into the mid-2000s. Gold. So gold has seen an impressive bounce in recent trade. The other day we warned about this rising trend line support that was coming in around 1200, and the market had broken down towards that trend line and tested it before bouncing off the trend line. So this does keep the recovery structure intact and suggests that the market could be putting in the next key higher low ahead of a bullish resumption back towards those highs that we had seen this year at 1307 and then towards the 1345 July peak further up. That's all for now.